FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 8/21/20. Well, in this current economic environment, in the economy that we're going through now, there's still a lot of you entrepreneurs out there. I know that because I'm one too, and I know a lot of you listen to the show, and you're wondering, how do you raise capital? Well, perhaps the most powerful capital raising tool ever. It's created several years ago, and it's out there available to everyone. But unfortunately, many of you don't really understand it. You don't know how to use it. I'll include myself among you because I don't. I'm talking about crowdfunding, crowdsource funding, where you go to different websites, whether it's Kickstarter, Indiegogo, or GoFundMe. You present an idea, a product, and then people send you money. And under the relaxed SEC rules, or rules governing securities, you can do this, you can advertise it, and can raise a bunch of money and not have to go through any regulatory disclosures. So why not find an expert on this? And we did. His name is Drakoln, and Noble's been a trader, hedge fund manager, founder, involved in all sorts of different capital raising activities. I mean, I could go on about you all day, Noble, and you've been all over the media as well, but you've become a kind of acknowledged expert about crowdfunding, haven't you?
Yeah, thanks a lot for having me on, Kerry. I really appreciate it. It's almost by default, when you've been in the investment industry for as long as I have. I started off when I was 17. I got my first license, and when I was 19, as a Series 3 commodities broker, you end up learning a little bit about a lot as time progresses. And so this has just ended up become by default an area that I just know well and continuously have kind of learned more and more about, because everybody needs a chance.
Yes, that is so true. And there's probably no other way to raise capital, at least for a startup, as economically as through crowdfunding, is there?
Yeah, so there's a lot of people have tried a lot of various ways, and they try and make it sound as if it's super easy just to raise money from friends and family. But realistically, that's not quite the case. When we look at it, unless you do an exempt offering, you're cut off from the majority of the money you can raise. Now, there's a lot of notes that have been created. There's convertible notes that came out of Silicon Valley. There's these safe agreements that were created as well, security agreements for future equity. And, they all have kind of their cap. But the best pathway to raise capital has always been just file an exempt offering. Do something where you file what's called a Reg D, and there's multiple forms of that. And file a Reg D, and you should kind of open your world up to marketing and advertising and getting investors to come into your company. Right, and so these exemptions, but when you're doing it in states, you got to file Blue Sky. So there's two parts, right? So there's the open crowdfunding that everybody's familiar with, Kickstarter, GoFundMe, Indiegogo, in which you're pre-selling your product in advance and people are joining in. That there's no Reg D exemption for that. That literally is people are pre-ordering your product. And so you don't need to jump through the hoops. But if you decide to do a Regulation D offering, then the Regulation D offering requires two parts. The first part is the federal filing, and that federal filing is that Regulation D that you talk about. But what happens next is, depending on where you get investors, then you have to file the Blue Sky or file the corresponding exemption in the state that the investors show up. So in both of those instances, you have about 15 days. So, a lot of people think that if they do a Reg D offering, they've got to file an exemption in all 50 states immediately. And that's not quite the case. You have time to make sure you file only in the states where you receive capital.
Right. And I've done a number of the private placement memorandums, et cetera, been quite successful at it. And I always thought there's got to be a better way, because I'm paying my attorneys here, and I was an attorney, and we actually prepared them and then gave them to the law firm for review, and it still cost me $20,000 to do that. And I was always thinking there's got to be a better way, and it looks to me like maybe crowdsourced funding is that better way.
Yeah, there's a lot of great, there's so many great platforms out there that help people raise capital. There's Start Engine, there's Republic, all of them allowing startup businesses to place their documents on the platform. But what's happened with the ecosystem is that because they see these platforms, they get confused on what the private placement can be and what they should file. And so they think there's only really one way to file. And the exempt offerings really have a multi-tiered system that allows people to file along the spectrum. So just to give you a good example, a lot of people who get into exempt offerings try and file what's called a regulation CF standing for crowdfunding. And the SEC is kind of trying to, raise the amount that people can raise. And right now it's capped at a little over $1 million. They're talking about increasing it to $5 million at the end of the last year is what their target was to try and push it up higher, which will kind of change the game in that space. But what that means, though, is when you do a Reg CF, you actually can only place your offering on one of these approved websites. As I mentioned, Start Engine, Republic, some of these ones that are very much for CF, which requires that you got to pay these guys, whatever the percentage is, whether it's to pay the subscription to be on the site, whether it's to get a percentage. You literally have to pay them something to be listed. And they themselves can't really sell your shares. They can promote and market the site, but they can't really promote and sell your shares. And so it's kind of this quasi broker dealer space that people have created, that they're not really broker dealers, but they have to be approved by the government to take the listings. And so it's a very complex system for that form of crowdfunding. But that means you can sell to everybody, right? You can sell to, someone who's not an accredited investor. They can buy 100 shares or 50 shares or whatever it is and participate if that's who your target market is. And there's a lot of good groups that succeeded at it. WeFunder is a good example. WeFunder has done a great job of bringing in those small investors to participate in a lot of projects. And they've done large deals, but they've brought in a lot of small investors using that format. But there's Reg A plus that you can file, which it comes in 2 tiers, raise 20 million or 50 million. There's the ability to do a Reg 506B, which you, as a friend and family, kind of raise, where you can market or advertise it. But the biggest benefit of the Jobs Act, and what I really believe was such an awesome turn of events, is that you can do what's called a Regulation 506C when you do your private placement. And when you do an exemption Reg 506C, you can advertise, Kerry, and that's huge. Before, you can never advertise or market any of your deals when they're private placements. So the 506C really allows you to kind of open up your sales and tell people what you're offering. The only caveat is they have to be an accredited investor. But that doesn't change the fact that you can't advertise and find and acquire or bring people in who just have never met you to invest in your deal, as long as they prove that they're an accredited investor. And that's a really awesome change. So I love the update that they did.
That's great. And it enables you to raise capital in ways that you would have never been able to do before, right?
You become your own broker dealer. You can put a link on your website, say invest now, and as long as you say this is an opportunity is only for accredited investors, then they've got the only accredited investors will fill out the link on the website, pull down your PPM, your subscription agreement, and right from your website, you're doing your own security sale. That's unheard of. Nobody was able to do that before.
So obviously, these are not publicly traded security. So they're highly risky. And basically in your private placement memo, my experience was, and I did a number of them, was pretty much in your risks. You say to the person, you're going to lose all your investment. There's almost no possible way you can ever make any money on this thing. Kiss your money goodbye. But if that's okay, then go invest, right? Isn't that what it kind of says?
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Listen, I come from the commodities world, and the first thing we say is past results are not indicative of returns. Anything you see can be skewed to the benefit of the of the offering, and at the end of the day, you not possible. It's you will lose all of your money. So that's the end of that conversation, right?
That kind of sums it up, right?
And still people invest in commodities. So 100%, every single private placement that you invest in has a 90% failure potential, if not greater, within the first 5 years. And then after those 5 years, they have another 90% failure rate of the ones that survive.
So it's that low, huh? The failure rate's that low? I thought it would have been higher.
It's that low. I'm being optimistic. But, what the reality is, we can say these statistics and say these numbers, but VCs still flock to this space. Private equity still flocks to this space because they're out for the outlying returns. They have these internal theses for their companies. I'm a advisor for an incubator / accelerator program in Los Angeles, and we're in the middle of developing our fund. We just launched our fund for them, and we had a very particular thesis on what we were going to do and who we're investing in. 300 companies, 300 pre-seed and seed levels, invest 25 to 50,000 in each one, with the expectation of majority of them failing, but at the end of the day, still generating a 20% IRR, internal rate of return (IRR), based on the thesis.
Good. That's pretty darn good.
It's pretty darn good, even though 90% are going to fail. And that's why private equity and VCs stay in this space. They know that if they find the outliers, and they've done a great job of determining a few factors, right? Is the team good? Are they good and have experience in what they're doing? Whatever that looks like, whether it's doing a startup or the product they're involved in. Does the product meet a problem solution set? Is it really a solution not in search of a problem, whereas it was designed from the ground up to fix people's problems? I think that's the majority of problem. Most entrepreneurs, they forget that they're not there for themselves; they're there to fix problems. Yeah. And finally,
let me just stop you there. I'm sorry. That is one of the greatest insights I felt that I ever learned as a business person. Is you're worthless unless you solve a problem. And whether that problem is how you get money from point A to point B, like in the Middle Ages, the Knights Templar figured out you can pay a guy here and pick up the money there, and they get a fee. But it's so brilliant, it's so simple, and yet it's so sublime.
Mm-hmm. But listen, the original MoneyGram.
yeah, exactly. They were there before anyone
Pony
else.
Express. People forget why the Pony Express is legendary to this day is because quite literally people wanted to communicate across this vast country, and there was no set postal service. Yet these guys had a string of ponies and outposts that strung across the country that were able to bring mail from state to state in a timely fashion. And that had never existed, the original FedEx of its time. And it would just solve the problem. And, I think that, like I said, that second part is where, as an investor, we need to make sure we're not investing because it looks pretty, that there's really a problem being solved. And and the final part is, and the third part, that when you look at these businesses is there a true margin? Have the margins been calculated correctly in order for us to generate a profit post marketing, post costs, cost of goods sold? And so I think that you don't eliminate failure rate, and you can't, because you're not the operator. But if you come in with those eyes wide open to a lot of these private placements, that goes a long way for you maybe making an educated decision that makes sense for you. And nobody's telling you to put all your eggs in one basket either, but that just makes it all the simpler for you when you have those three things in mind.
Yeah, it's such a great point. And just tell us, give us some examples of some of these long shots that have paid off.
Now, I mean, the market is rife with it, right? Airbnb, Uber, these are all started off as exempt offerings at some point. We can all talk about all these long shots, and that's what the VCs and the private equity are always in search of. They call them the unicorns, right? The ones that they can go through multiple series of investments. Along the way. People forgot Amazon was net negative for over a decade before they ever turned a profit, and now part of the $1 trillion club. These companies exist and we watch and see them, and this is why the VCs and PEs stay there. What I think gets lost, though, in the shuffle is that there's a significant number of companies that fit like a middle ground. They're not the second level, and when we created our theses for the fund that supports the accelerator, we said, look, we're not going to focus on the one or two unicorns that'll come out of the 300 people cohort, because we'll get money, it'll succeed, but we'll see where that goes. But we'll focus more on the companies that have an opportunity to generate a nice bread and butter business, and that can go through multiple seeds, levels of financing. So they can go to around a Series A, and in that Series A, they may be done. They may be only a $10 million or $25 million company that's annually producing return. But because we own a percentage, we're taking that income for our percentage. And then we may get one that goes to a Series B and a Series C. Nowadays people are going all the way to Series E before they ever get to the public markets. But I think the same thing can be said for a lot of the private placements. If you're looking at these private placements and your expectation is that they're all going to be unicorns, I think that's kind of the wrong idea. I think that if you're looking in, and I think if a founder is selling you that they're going to be a unicorn, that always concerns me, because nobody knows if they're going to be a $1 billion company or not. I'd rather go with someone who says, hey, we're going to successfully do $10, $15 million a year, selling X number of widgets, generating X return. I'll go with that guy over anybody who's telling me they're going to be the next Amazon any day.
Yeah.
So I think there's a lot of mid-level businesses, particularly now because of COVID-19, that are turning, we consult many of them that are turning to crowdfunding as a way to mitigate both lending as well as their cash flow crunches that they're dealing with, because their customer base has changed and they're retooling. That doesn't mean the business is bad. It just means that, you've got nimble founders who are doing things differently. And I like those kind of people.
And obviously, crises like we've had, they call for a paradigm shift. They call for a total change in thinking. And the entrepreneurs are the ones who are set up to do this, whereas the people in the big companies aren't necessarily really good at that.
Well, you and I both know why, Kerry. I mean, the ones in the big companies, they are not paid to solve the problems. They're paid to push the widget. And so 90% of them, for lack of a better word, in the major corporations don't care. They're happy to get a new job elsewhere where they can continue to be a cog in the machine. And there's nothing wrong with it. All of us have had to play that role. But if you're really hanging your hat on taking advantage of some of the nimble founders that see what's going on and are moving, you've got to play in this private placement space, because that's where you're going to find your opportunity for outlier returns. It doesn't guarantee it. We said most people will fail, but that's where you kind of look to find those outlier opportunities. And it's funny. I told you before the call, how I even got back in this space was solely because I filed a patent on augmented reality. And it was about interactive clothing and how we can make clothes come to life and how to get kids outside instead of sitting in house playing video games. And obviously COVID impacted us because, nobody's sending their kids to play outside and interact with any other kids. Well, we pivoted, and our pivot, we've been happy with our pivot, and now we're in talks to turn one of our IPs into a cartoon, and we're figuring out a way to interact the cartoons with the clothing. So we had to pivot, and the only way we could have done that is being a small company. There's a team of 5 core people and several engineers on the outside, but that's it.
Well, I got to tell you, I love the concept because just like in business, you got to solve a problem to create a product or service that people want. In finance, crowdsource funding, and these other methods of exempt financing really have found a solution to a problem that has ailed us since the implementation of the Securities Act of 1934, or the SEC. And this seems to be it. Hey, I know people are going to want to get in touch with you, connect with you on the web. How do you do that?
Yeah, no, I mean, there's a couple of levels. And don't forget, there's the second part before we close out. The second part that changed everything, too, was the institution of qualified investment plans. So basically setting up your own IRA 401k. There's $9 trillion sitting in IRAs, and people are languishing, in their IRA accounts. And that became like the biggest place for people to roll over and do these private placements. If you're really interested in, and you're serious and you have some kind of seed capital, but you really are looking for investors, we have a database of about 900,000 accredited investors. So if you want to reach out to me, it's easy to find me. Look me up on LinkedIn, schedule an appointment, and I'll see if our consulting services can help you. So it's just Noble Drakoln on LinkedIn. If you want to find me on Twitter, you just use my last name, @Drakoln. If you are interested in what we're doing in the tech space and you like what you're seeing there, you can always reach out to us. It's maccelerator.la. If you're a kind of a startup that wants to, get a part of an accelerator incubator of guys who get it and are helping people launch their businesses. And then just my tech company is called Where Play Games. So if you want to check us out and see the fun stuff we're doing, just reach out.
Okay, cool. Hey, well, definitely interested in what you have to say. We'll be in touch soon. Appreciate you coming on. We'll have you back on again. Any questions, comments for Noble? Email me, kl@kerrylutz.com. Twitter feed @KerryLutz. Facebook page is Financial Survival Network, and our website, financialsurvivalnetwork.com. Noble, been a pleasure. Thanks so much for coming on.
Hey, thanks, Kerry, for having me. I really appreciate it. Enjoy your day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.